Welcome in, everyone. I hope everybody's having a great weekend. Today we're going to kind of recap that Gamma and Market Tide post that I posted on X, where I noticed the Tide was selling off and Gamma was overextended, and I was looking for a pullback in the market. So I'm going to I want to do a video breakdown on this just because can go a little more in depth here. So, I'm going to start out, I'm going to show everybody the tweet, I'm going to show the day that it was posted, how far we dropped, kind of what I was looking for in Gamma and the Market Tide and all that. So let's get started here. So first up, on October 3rd, this was obviously in the evening, so you wouldn't have been able to get into this setup until Monday. But when we look at that flow here, this will kind of show everybody what I stuck out. So I posted this on X, obviously anybody can see that. So we had our biggest drop in the net call premiums here over the last 14 sessions. So again, timestamps matter in this. People can post moves after they already made a move. Feel like it's better for people to post it before the move, otherwise you're not going to make money. But this was the tweet, again, Friday night. And you can see this is how that Market Tide kind of looked at the time. You had a lot of net call or bid side net call premium here, so this is just kind of showing you there's probably a lot of outflow and calls here, and you had a rise in that put premium here. When we looked at that Gamma here as well, too, you can see how far we are extended with this. And I'm going to actually pull it up in Unusual Wills, and we're going to look at the Gamma first here. So good way to kind of, if you're newer to using Unusual Wills, you'll kind of see where the stuff is here. So under flow data, you can just kind of come over to that Jax, Dex, Vanna, Charm. This is going to bring you to that daily Gamma spot. So this is your kind of beginner Gamma page where they just kind of bring you everything, where you get all your data here. So where I was looking here, so you're going to come under Gamma here, and you're looking at that daily Gamma. So your daily Gamma exposure here. So now typically this doesn't always happen right away. It typically will take some time. So buying time on contracts is always big. But perfect example here. So again, back on the 3rd here. So here's the 3rd. This is when I posted it. You notice you can see a lot of negative Gamma here. So negative Gamma would be a bearish sign here. So market makers are kind of exposing themselves to the downside essentially, which would be bearish obviously. And I kind of want to show everybody an example from a little bit earlier in the year or two, where it kind of takes a little bit for that price to catch up to that Gamma level. So this is SPY. We're going all the way back to obviously October of last year here. So perfect example here is you see a lot of from December all the way till April here. April, maybe early May here, end of April. You just see a lot of negative Gamma. So this is telling me here, and you can see at the time SPY was pretty in line with price here. It was still kind of hitting price and just choppy, but again, price will typically catch up to your top Gamma level or bottom Gamma level, in this case bottom Gamma level, and you can see that negative Gamma continuously starting to pick up. That is a bearish sign. Market makers are exposing themselves to the downside. You can see price dropped here with the tariff stuff going on in April here. So now how you could have used this to the upside is you're still here mid-April and you're seeing that Gamma starting to kind of improve here, and you're seeing some positive spikes. That's a good sign. You're seeing a lot of positive spikes here, and you can just see how SPY starts to typically follow up here. And when you start seeing the large Gamma spikes and that price diverged, that's what catches my attention. So this is what I'm kind of talking about when I say price is going to catch up with Gamma at some point. So now, when we look at our current situation, so since end of July all the way till about now, you're seeing a lot of lower Gamma here. So at this point here, when you kind of see these upper spikes and that price is close, my attention's not really going to that, just because you're so close to it. this is where it should be grabbing your attention. You can see how far that price has extended from that negative gamma. To me, this is going to suggest downside movement at some point. So you can see we obviously made a pretty big down move here on Friday, on the 10th here. So I'm going to kind of show everybody that movement as well on a chart here too at the end. But this is kind of that gamma exposure, and just obviously kind of looking at those numbers. I mean, you see a lot of deep negative gamma days. That should be a big telltale sign for you there. So now let's look at market tide. So I combine both of these tools. I don't usually typically use one tool by itself. I combine all the tools on Unusual Wheels, full of great tools and really game-changing tools. So that's how you get to the gamma. That's kind of what I was seeing on the gamma. So now let's look at the market tide. So I want to go back to the main page here just so everybody can kind of see how to get back to it. So that was under the flow data, your gamma. Your market tide is also under the flow data. Just go to market tide, and we got an update. So they are adding in some stuff here, so you can get rid of the tour. So here is your all and out of the money premiums. So essentially anything above this zero line is going to be ask side put premium. So this is Friday the 10th, obviously. Anything above here and rising, that would be showing aggression. And you can see a lot of outflow with calls. So anything below that zero is bid side calls. So you're thinking of this as outflow and this is inflow, essentially. So what I like to do with the tide, and you're all and out of the money. So all premiums, your solid line, that's going to be all premiums. So deep in the money contracts, out of the money contracts, all of that. And same with puts, the solid green line, all premiums, in the money, out of the money, and the dotted lines would just be out of the money only. So I do like to keep both on just so I can kind of get a good read on everything. Now, when you look at this on a daily level, you see how that daily movement is. So daily, I would like to kind of see for more scalping or so, but on a longer trade, so like this, I'm going to pop out 14 days, and we're going to look at the last 14 sessions here. So when we were looking at the 3rd here is October 3rd here. Where's that? Nope, where is our 3rd? 3rd was here. So we are, at the time, obviously, we had some other bid side days here, but 3rd here, when we look at this, you just clearly see a lot of bid side call premium. That's a sign that should kind of catch your eyes. Like, oh, this is our biggest bid side call premium on the day since, let's see. So 3rd, we don't have anything there. Let's bump it to 30 days and look. Okay, great. So this is kind of why I'm saying look at that larger time frame. Here's our 3rd here again. You can see we had net call premium at a negative 280, and you can see that up here when I was doing that. So we'll come back here. It's going to show Fridays actually, because that's the day it was. So we had negative 280 million in net call premium. We had a lot of calls come off the table, a lot of outflow that day. And that was the biggest day of outflow since back here on 8/29. And what happened that next day on 8/29? We gapped down. So good sign there that our tide was showing a pretty big bearish signal, and we also had a spike in that put premium there on the day. I'm going to kind of zoom in here a little bit so we can see a better view. So you can see we had a little spike in that put premium there, and even popping this out 14 days again on the 3rd here. This was our biggest put day here since, or seeing biggest put premium day here since September 23rd. So that should kind of draw your attention. And I do like to look at the other premiums as well too, just to kind of see what's going on. Obviously a lot of call premium and SPY has been going up as well. So kind of looking at that looked good there. And the interesting thing here is looking at the last, okay, we're going to pop this back 14 days, sorry. Now looking at the last 14 days, 10-7, we had more call premium coming off the table, and then obviously Friday we really dipped, and you see that put volume also picking up. Should always be looking at that volume. So we're going to pop this back out to the 30-day again. So again, on your third here, you start seeing that put volume picking up. You know that call, where are we? Right here. You know that call premium starting to dip. Should be a good sign. And if you're matching that up with the gamma, knowing that it was going to drop, that's your sign right there. And just kind of knowing other market fundamentals, you're overextended, all that. So now I do want to show everybody. So again, here's your chart. This is when we posted it on the 3rd. Wouldn't have been able to get in here until the 6th here. And look at that move down. Took a couple days, and typically sometimes it will take longer, so always be smart. Always buy time on your contracts. When we look at this from that, technically the 6th here, when we look at this, look at the drop here Friday to the low. Almost a 3% drop from that level. That is a massive candle. And I do want to show everybody as well. So massive candle there. Again, tried to warn everybody about that. And this is the results here. I mean, I hammered that back on 10-3. Everybody in Stock Hub, I was telling them I'm getting in January puts. And great day here, 7% day on the portfolio yesterday. Just this is knowing the market, knowing fundamentals, and knowing your data and trusting the data. But just kind of want to do a quick little review of that. That was a very great trade there. Obviously looking like we got another big dump on net call premium yesterday. Obviously you have to see what happens there, and big spike in the net put premium there. And you do still have some space on that daily gamma to drop a little bit. So your line where it would be flat would be about 600, and got a little bit more to go there, about 6-7% to get to that 600. And the one thing with gamma, though, it does update only once a day, so you'll have to see that Monday. But good little tool, great tool to combine with market tide, great tool to combine with the gamma. Unusual whales blows it out of the water every time. But if you're new and you want to try unusual whales too and find these tools interesting, I do offer a 10% discount. I will throw that in the description below. But just wanted to do a quick little video on that recap and a little deeper dive on it as well. Have a great weekend, everyone.